curious what Fed Chair Jay Powell could say that would change things for venture capitalists.
Well, thanks, Emily. So I would say overall, what we're all really eager to see is what the impact on the soaring inflation is going to do for all of us. And generally, I think we're all looking at the outlook of unemployment reaching absolutely 5-decade lows. And generally, what does this mean for interest rates when they've really just been hovering at near zero for so long? And I think we are all just taking a pulse on what this employment environment is going to look like going forward. So startups are
So,
trying to hire.
well, exactly. So let's say, the Fed says we're going to take more steps to tamp down inflation. Would you do anything differently? Would you advise your portfolio companies differently?
I think everyone's just trying to reduce spend continuously, Emily, so that they end the year really strong. I know we really just kicked off the second half of the year going into Q3. And so generally, I think every startup in the market right now is still got that hiring freeze going on. And really, they're kind of eyeing the end of the year and saying, well, how do we keep retaining talent? How do we keep ensuring that everyone's incentivized while really increasing the workload on everyone while hiring is still more or less still at a standstill.
So, are your portfolio companies then thinking about doing more layoffs if this environment continues?
Some of them are. Some of them are. I think generally going into the start of this past year, a lot of the late stage startups at least had big aspirations for big hiring plans. And so generally they are still looking to keep reducing spend across the board. With that said, I think the hiring is still at a standstill. They're not really targeting an increase in budgeting and keeping things really tight. And I think a lot of startups are changing course around their narrative, around their forecast going into the second half of this season.
Is it changing your investment strategy at all? I mean, are you pushing for lower valuations? Are you reducing the amount that you would put into a single company? Do you, as an investor, have more power because, times are tough for some of these companies?
We really are seeing a big shift, and our investment strategy remains the same. So at Manhattan Venture Partners, we are looking at late stage companies that are in the top decile of their sector. They are a category leader. They have strong financial backing. What we're saying is that from a reflective standpoint of the public comparables, right, the publicly traded companies comping to the private startups, we're saying, listen, the valuations of these late stage companies are still really high. Overall, a lot of the companies were still raising at 20 to 40, if not 50 times revenue alongside other fundamentals. And with that said, a lot of them really just don't want to take that valuation cut. So what we're seeing is companies really leveraging debt structures as well as different types of anti-dilution rights that we're kind of putting in place, as well as many other venture capitalists to say, we don't want to see you raise a down round. We'd rather come up with something really creative as an alternative.
All right. I know you're an investor in Instacart, and Instacart is planning to go public later this year. They've also, done a big, quote unquote, down round, which, they chose to do of their own volition, given the change in the market. Curious what you're expecting for their planned IPO at a time when it seems like the IPO window is pretty much sealed shut.
Yeah, so from what I can share, really, I think generally Instacart is one of many companies who are really still eyeing the market volatility to determine whether to go out this year, if at all, right? I know that that's what we're all discussing. Generally, I think that they're a company that really opened up the ambiguity to say maybe they'll go a traditional IPO, maybe they'll do a direct listing, maybe another function of an exit. I think at this point in time, based on what we all know publicly, it seems that a traditional IPO path is probably the safest course of action if they were to go out this season. I think really we all expect that window, that IPO window, is between the third week of September and more or less the absolute latest being the second week of December before the big holiday season. So they have some more time to get ready. I do think that they could be the blockbuster IPO to end the year, but generally, I think it's still a little bit shaky, and we aren't seeing a course correct in the public market yet to say whether or not for certain they will go out.
There's been a lot of controversy over the very big check that Andreessen Horowitz wrote to Adam Neumann, the co-founder of WeWork, for his new real estate venture. Some don't like it, Some people do. What do you think?
So it is the largest single investment that Andreessen Horowitz has ever written. And I think it's fascinating that they both supported Adam Neumann for Flow as well as Flow Carbon and everything that he's doing on the blockchain side. I think the strategy here is that obviously Adam Neumann, whether we love him or hate him, is a proven founder and he could do it again. He already tried it with We Live, right? And that didn't really pan out. Obviously, there were other things to focus on when he was building WeWork. But overall, I think where it's really fascinating for Andreessen is that they obviously have such a strong focus in cryptocurrency and the future of digital assets. And I think where the narrative really is interesting here is how Adam Neumann says that at Flow, they plan to offer a crypto wallet as part of the entire offering here and say that users could pay to earn and rent to own as well. And so, with that being said, I think the overall strategy for Andreessen is that this is not only a category defining way to change how we all live and where the biggest asset class being real estate could change to democratize that ownership, but it really goes to the thesis that Andreessen has around crypto going forward and how digital infrastructure is going to change. So I think it makes a complete large amount of sense that they coupled this together and said, we've got a proven founder and we're going to take this forward and see that he changes the world again, and this time in a different asset class.
Interesting take. The controversy aside, what do you make of the size of this check in general? To write a check that big in this very uncertain economic environment?
Yeah, well, Andreessen's funds just keep getting larger, so they do have to start deploying check sizes that are quite sizable across the board. So I do expect to see more of that from them as a fund. But with Flow specifically, I would say that this is a company that's going to need a lot of capital to keep acquiring the units that they have. I mean, as of right now, they have 3,000 apartment units under their mandate. And going forward, it's going to require an increasingly large amount of capital and doing it at a velocity that's really high. So it doesn't necessarily surprise me, but I would say with this capital, I would expect that they're probably well off for the next 2 years when it comes to their runway.